On the other hand, when pressed, many claim that their money is in the bank's possession. Yeah. So the question becomes, would things remain the same if individuals were better informed about the terms and conditions of fractions or banking? In general, though, they aren't very interested in your getting a degree. Yeah, really? I get the impression they'd rather you not. However, I do believe that a free market, particularly one in which consumers are well informed, is clearly preferable to a mostly controlled system where prices are dictated by central banks. I see. In the long run, do you believe that central banks will become obsolete? If, for example, that becomes more probable as Bitcoin's success grows than 5, 10, or 15 years from now? I don't see it happening. In my opinion, though, it's totally doable when looking at the big picture. That is why I am not as concerned with moves like the Federal Reserve. Plus, my main goal is to create an alternative and watch it succeed where the Fed has failed. Hold on a second, everyone. We can all agree that the cryptocurrency market is always moving, but with so many newsletters to pick from, how can you find the one that's right for you? Because to its straightforwardness and ease of use, Bitcoin Zella stands out. No matter your level of crypto expertise or familiarity with the industry, we have designed an experience that everybody can enjoy. Guess who's been watching us all along? Man behind the smash hit Rich Dad, Poor Dad, Robert Kiyosaki. Also, we'd like to use this chance to express our gratitude to everyone who has put their faith in us. What's more, it's completely free, and we peruse each and every comment. You may get all the fresh information for free if you subscribe now. Keep one step ahead of the curve rather than merely following it. Get a head start by subscribing to Bitcoin Zella now. Lyn Alden is a financial strategist and macroeconomist who is featured in today's video. Whether or not the Federal Reserve should be abolished is one of the many topics covered in this conversation, along with the Fed's function in central banks, free banking vs. fractional reserve, the impact of Bitcoin on these dynamics, and more. According to Lyn Alden, there are now methods to do irreversible settlements, rapid payments, and settlements. It's becoming more apparent that perhaps a central bank is unnecessary. Due to the low demand for Bitcoin-denominated loans, it is unlikely to be a problem for the time being. And in cases where there have been, it has been for the purpose of leveraging, such as when someone borrows Bitcoin in order to purchase Grayscale. That seemed like a deal from a bygone era. With such a large price swing, few businesses are considering Bitcoin loans. So in my opinion, it's more about hacks involving exchanges or custody and less about that, because it's so easy for Fidelity or BlackRock to make the same error. I don't think they will rehypothecate or fractionally reserve it. It's not impossible. Therefore, governmental confiscation is likely the greater threat, in my opinion. That way, they may claim, look, these things are no longer withdrawable there. If everything is essentially gathered into huge buckets. Another thing is that you are free to invent reasons XYZs. Our Bitcoin number is 6,102. If you must. Yes, or at least claiming that Bitcoin is a walled garden. And we can't release them into nature for fear of terrorist funding or any other reason. I am less worried about Fidelity's Bitcoin or BlackRock management, so that is likely the greater danger. I'm more worried about the eventual instructions for their use of it. Is it because they intend to take it? Is it because their own economy is in shambles? Are they screwed with their own currency? I suppose so. Perhaps that's the case. Another possibility is that as time goes on, financial institutions become increasingly monitored and controlled, and they grow to dislike Bitcoin's decentralized nature. Free-range Bitcoin is more difficult for them to do, Bitcoin without a fee, therefore they may crack down on such in due time, particularly in the aftermath of a devastating tragedy when people's emotions run high. Do you realize this? Imagine for a second a scenario in which the tragic events of September 11th were easily followed by the passage of the Patriot Act and the subsequent inciting of public opinion to wage war against Iraq, a nation that had no hand in the attacks. Just picture this, they announced, listen, we need to crack down on Bitcoin after a comparable big event. We must exercise stricter regulation so that this does not facilitate the funding of terrorism or XYZs. On top of that, you can find a justification to block the exits. Financial oppression alone is enough. When Argentina's currency is in crisis, for instance, the government may implement laws prohibiting banks from providing the service to their clients. No one can provide it, not even fintech firms. And they never once bring up the fact that our currency is in turmoil as the reason. They justify it by claiming that we must prevent money laundering and anti-money laundering in order to keep banks afloat. As an excuse for their incompetence, they'll use any variety of platitudes that seem reasonable. Actually, it's because they are unwilling to let their currency problems subside. You may observe this in Turkey and Nigeria. And the way they're usually put out is either that that we want to do stability and safety, or that they'll accuse, quote, financial speculators. A lot of people are playing the currency market for fun. Because of this, they will attempt to seal off the exits and cast a negative light on a specific group. Therefore, I am worried that a sovereign entity would take over such large Bitcoin honeypots in numerous jurisdictions. Even though Bitcoin might see a 3.2% decline in June, things could change before the month ends. When Ten talks macro analyzed the effect of Fed liquidity circumstances on BT, he found a strong link that has persisted for a while. He expressed his ongoing astonishment at the association between Bitcoin and Fed liquidity in a commentary for the company's X platform. The next 10 days will see liquidity hit rock bottom before ripping higher once more. Gather your belongings. Cryptocurrency price peaks and valleys coincided with regional Fed liquidity peaks and valleys, according to a chart from his own macro data source, Talking Macro. There was a surge in liquidity even after Bitcoin hit its most recent all-time high of $73,800 in the middle of March. That the sum is derived from a combination of data from the Federal Reserve repo markets and the Treasury. Problematic short-term headwinds for Bitcoin were brought up in the macro discussion, with a new drop in inflows to a spot Bitcoin exchange-traded funds being mentioned. Just 4 trading days ago, they had net withdrawals, reversing a trend that began in early June when they saw their second highest daily inflows on record, according to data from Monitoring Resources, which include a UK-based investment firm. The total outflow for the past 4 days is little over $700 million, which is lower than the $886 million inflow that occurred on June 4th. There will likely be a swell of institutional investment in Bitcoin in the third quarter and beyond, as U.S. wirehouses are expected to acquire access to spot ETF products. As Bitcoin continues to evolve into a formidable investment class for institutions, that event will be closely watched. Some of them include Cathie Wood, head of ARK Invest, an asset management firm that offers spot ETFs. All of this price movement has occurred prior to Bitcoin's approval by any platform. Therefore, we have not even started. In March, she discussed us wirehouses in an interview. In my opinion, that does provide some intriguing price signals. People fail to fully appreciate the gravity of the risks they take, which is a contributing factor, in my opinion. Therefore, while DeFi makes borrowing less dangerous for the consumer, it makes lending more risky for the lender due to hack risk and liquidation risk. Yeah, plus I feel like that gets somewhat disregarded quite a bit. Therefore, the price may not be correct. When you look at how they work, you'll see that there's no rehypothecation. Thus, I think the rates for Bitcoin collateralized loans will go down eventually. One good example is Unchained. Yeah. There is hardly no loss with such. In many circumstances, it's zero because Bitcoin itself serves as collateral. The market is very liquid. As a loan, the only possible scenario in which you might incur a loss is if Bitcoin's price experiences a highly illiquid decline. The value would plummet so rapidly that you would be unable to even sell the collateral to repay the loan. Therefore, it's essentially a risk-free loan arrangement. Barring that one particular case, rates will likely fall in due time, but I don't keep a careful eye on that market. Though it is the largest cryptocurrency in the world, Bitcoin still has its shortcomings. In the hopes that the market won't go back up to $70,000, sellers are increasing their wagers on the downside. The on-chain analytics company CoinLast claims that if Bitcoin reaches $70,000, a huge $1.67 billion short position will be closed. The interest of investors and traders in this data is skyrocketing. But Bitcoin has been trading below $70,000 since June 7th, 2024, and ever since then, it hasn't been able to gather momentum, dropping below the 50 and 200 EMT, which is a negative indicator.